Good morning, Oracles. Well, yesterday was not pretty. We were down over 12% on Tesla. If I had a bright neon red shirt, I would have to be wearing it today because that's a significant drop. But that also led to significant buying opportunities for us. So let me know if any of you took advantage of this. I know many of you told me you did because I was buying all the way down from 987 all the way down to trying at the last minute to get into 875. I was trying to buy all the way down. And I followed my strategy. Every $10 increment, I was buying $10 increments in the stock. Once we broke under 900, I started adding in $15 increments. In my IRA, I added at 950, I added again at 900, I will add again at 850 if we get to that point today. And I do have some money left over in there that I can pull out of QYLD to slide over to Tesla if we continue to drop further. So we did fill that 905 gap that we had talked about previously. We do have that tiny little gap down to 801 that does exist. And while many of us thought that wasn't a possibility, falling 12% in one day tells me it is a possibility. So whether we get there or not, I don't know. But let's talk about why this happened yesterday. So it was like the perfect storm of everything going on. The NASDAQ was already pulling down as it was. Bloomberg put out an article in the morning about Tesla basically being a one-trick pony and all they do is sell EVs. I'm sorry, but that's what they do. I mean, look at Ford and GM. What else do they do? Tesla is also completely vertically integrated, unlike the other legacy automotive makers. So whatever, that's the report that they put out. They said that they're going to go the way of Nvidia and Facebook and they're just going to crash on down. That, of course, signaled a selling opportunity for many people in Tesla. That started to tumble. Then talks about Elon having to sell his shares in order to cover his purchase of Twitter. That brought the stock even down further. And then, of course, if anybody had margin in Tesla, anybody got margin called, and that just kept that tumble going. And then, of course, when people see this, hey, it's time to short the stock. So then shorts jumped on top of this and really pulled things down further. So can we come down more? Of course we can. The market can go anywhere. The stock can move down even further. It doesn't have to come back up at this point. It will in the future. But what can we do about this? Well, I'm going to continue with my strategy. I was smart last week. I put in my sell orders for Apple and for Enphase, got myself a huge lump of cash on the side. I had 13% cash. I'm now down below 11% cash because I have buying up a lot of Tesla and some other stocks. But I'm going to continue to buy this on the way down. Once I do see a little turn signal and I see us coming back up, I'll probably dump in a little bit heavier. Until then, I'm going to continue my strategy of adding $15 for every percent that we drop. And if we do end up going under $800, I'll start adding at $20 for every 1% that we drop. And now for any of you out there who are able to do fractional trading, just remember this. If you put in $15 at $900 per share, that $15 is actually going to buy you more shares at a lower price because you're doing it in dollar increments versus just buying shares. So when I keep on adding higher dollar increments, the lower we go, that means I'm adding more shares at a lower price for the same dollar amount that I was at a higher price. So it just helps me accumulate shares faster by doing it this way. And so looking at the charts, it wasn't the prettiest thing to look at yesterday. So yes, obviously I'm still very bullish on Tesla long term, but we definitely broke down. We were talking yesterday morning about something big is going to move the stock, and sure enough it did. I was right in that aspect, but I didn't know that it was going to be a downward movement. Of course, I was hoping for an upward movement. But, just looking at the technicals, we were priming ourselves for a breakout or a breakdown. We broke down. We broke down significantly. RSI is now down to 37.5. That's a huge drop, but that is now pushing us closer to that oversold range. Now, on a huge sell-off day like yesterday, with 45 million shares trading hands, that's a lot. That's usually a bearish sign when you have a lot of high volume on a sell-off day. But I think a lot of it has to do with the news that we had gotten about Elon and all of those fears, and then perhaps margin calls on top of it. So again, not the greatest of signals, but still a great buying opportunity that can turn around in the future. And so let's discuss Elon potentially getting margin called for Twitter and having to sell his shares. Well, in reading an article that I had seen, it looks like in order for Elon to get margin called for this, the stock price for Tesla has to fall down to $570. That's significant. Obviously we did see in February that we pulled down to $700, but to pull down to $570 is a 43% drop. That's a lot. Can we get there? I mean, we can, but I don't think realistically that is even going to happen. So the chances of Elon getting margin called for this are very, very slim. So the chances of Elon having to sell any of his shares, most likely not going to happen. So all of the fear that was caked into yesterday's sell-off is most likely all for nothing. It was an overreaction to news that we had gotten for people who don't fully read information and they just go by headlines. So that is why, even though we had 45 million shares trading hands and a 12% sell-off, that is why it is a great buying opportunity. Overreactions happen in the market all the time. We see it happening when the Fed talks about raising rates. We see it happen when the Russia-Ukraine war situation was announced. All of these things, the way the market handles it is an overreaction every single time. And if you are able and agile enough to be able to take advantage of these overreactions, you will be able to make some great profits in the future. And so yesterday, the only people that actually lost were people who either sold or got margin called. The people who won were the people who held or were able to buy more shares. That's how this works. Because don't forget, you don't actually have realized gains or losses until you sell. So if you were somebody who sold off yesterday because the stock was coming down and you were afraid because your portfolio was red, guess who lost? You did. And it stinks. I've been there. I've been guilty of it. I've made that mistake myself. But I've learned the hard way that you've got to go in the opposite direction of what your emotions are telling you. If your emotions are afraid because you're afraid of losing everything, you shouldn't have invested that much money in the first place. Not financial advice, but that's just common sense. If you can't lose it, don't invest it. Secondly, if your emotions are that involved, you got to learn to take them out because, trading based off of emotions is exactly what market manipulators do to retail traders. So that's all that they do. They manipulate your emotions, and they're literally just doing that so they could take your money. It's like a bully. A bully pushes you around just because they want to get a reaction out of you. So market manipulators are just bullies just so they can get a reaction out of you, and that reaction is literally your money. So don't react the way they want you to. React the opposite of what they want you to. That is how you beat them. That is how you win. And quite possibly one of the greatest things that I had noticed yesterday was if you look at the PE ratio, the forward PE based on Q1 earnings on an annualized basis, our PE is currently 69. Does it get more perfect than that? If you're looking for a sign as to whether you should buy or not, there you go. A 69 PE after a 12% sell-off, yeah, that's a signal to buy. And to finish it all off, to finish this on a great note, for anybody out there who was thinking, oh man, yesterday was rough, are we going to come back? Questioning this, Elon's tweet, and forgive me if my accent is off on this. He says, per aspera ad astra. That means through difficulties to the stars. So yes, these are difficult times. The stock is going through a rough phase. But again, this is another way of saying fortunes are born during bear markets. It is rough right now. Hold through this. Invest where you can. If you've got that spare cash, put it into the stock. Because when we come out of this, we are going to the moon. We are going to Mars. We're going to the stars. So just hold, be strong. We are all going to be happy in the future. maybe a year or so to get there, but when we come out of this, it is going to be an amazing journey, and we're going to be so grateful that we took advantage of these opportunities now. Let me know in the comments below, how are you feeling about yesterday? I know a 12% drop definitely can be painful, but again, this is something we talk about on the channel all the time, being ready for these moments and buying this fudge. Because I gotta tell you, there was a lot of fudge to be bought yesterday. So I scooped up a whole bunch. Let me know how you guys are handling this. Let me know how you're doing, because I know this is something that I've been now known for, is helping keep everybody calm during these times. So let me know how you're doing. We'll chat in the comments. If you have any questions, let me know, and we'll discuss it there. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. Thank you so much. Have a great one.